Understanding inflation, what it means for your wallet. Hey everyone, welcome back to our channel. Inflation is a term that permeates economic discussions, news headlines, and personal finance conversations. Whether you're buying groceries, paying rent, or investing in stocks, inflation plays a crucial role in shaping the economy and impacting individual financial decisions. But what exactly is inflation, and why does it matter to you and your wallet? This video delves into the intricacies of inflation, exploring its definition, causes, effects, and most importantly, its implications for your personal finances. By understanding inflation better, you can make more informed decisions to safeguard your financial well-being. Defining inflation. At its core, inflation refers to the general increase in prices of goods and services over time, resulting in a decrease in purchasing power. In other words, as inflation rises, each unit of currency buys fewer goods and services. This erosion of purchasing power can have significant ramifications for consumers, businesses, and the overall economy. Inflation is commonly measured using various economic indicators, with the Consumer Price Index, CPI, being one of the most widely used metrics. The CPI tracks the average change in prices paid by consumers for a basket of goods and services, including food, housing, transportation, and healthcare. Causes of inflation. Understanding the causes of inflation is crucial for grasping its implications. Inflation can stem from a variety of factors, including 1. Demand pull inflation. This occurs when aggregate demand exceeds aggregate supply, leading to increased competition for goods and services and subsequently driving prices upward. Demand pull inflation often occurs during periods of strong economic growth and low unemployment when consumers have more disposable income to spend. 2. Cost push inflation. Cost push inflation arises when production costs, such as wages and raw materials, increase, prompting producers to pass these higher costs on to consumers in the form of higher prices. Factors such as rising energy prices, labor shortages, or supply chain disruptions can contribute to cost push inflation. 3. Monetary policy. Central banks play a significant role in managing inflation through monetary policy. By adjusting interest rates, controlling the money supply, and engaging in open market operations, central banks aim to influence borrowing, spending, and investment behavior in the economy. Expansionary monetary policies, such as lowering interest rates or increasing the money supply, can stimulate economic activity but may also fuel inflationary pressures if not carefully managed. Effects of inflation. The effects of inflation are multifaceted and can impact various aspects of the economy and individuals' financial circumstances. 1. Reduced purchasing power. One of the most immediate effects of inflation is the decline in purchasing power. As prices rise, consumers find that their money buys fewer goods and services, leading to a decrease in their standard of living unless their income rises at a comparable rate. 2. Income redistribution. Inflation can redistribute income and wealth within society. Debtors, such as borrowers with fixed-rate loans, benefit from inflation since they repay their debts with money that has decreased in value. Conversely, savers and creditors experience a loss in real purchasing power, as the value of their savings or fixed-income investments diminishes. 3. Uncertainty and planning challenges. High or unpredictable inflation levels can create uncertainty for businesses and households, making it challenging to plan for the future. Businesses may struggle to set prices effectively, while consumers may hesitate to make long-term financial commitments, such as purchasing a home or investing in retirement. 4. Impact on interest rates. Inflationary pressures often lead central banks to raise interest rates to curb spending and dampen inflation. Higher interest rates can increase the cost of borrowing for consumers and businesses, potentially slowing economic growth and investment. Navigating inflation's impact on your wallet. Given the pervasive influence of inflation on the economy and personal finances, it's essential to adopt strategies to mitigate its effects and protect your financial well-being. 1. Diversify your investments. Inflation can erode the real value of traditional assets such as cash and bonds. Consider diversifying your investment portfolio by allocating funds to assets that have historically acted as hedges against inflation, such as equities, real estate, and commodities like gold or real estate investment trusts, REITs. 2. Consider inflation-indexed securities. Inflation-protected securities, such as Treasury inflation-protected securities, TIPS, offer returns that adjust with changes in the CPI, helping to preserve the purchasing power of your investments in inflationary environments. 3. Review your savings and debt management strategies. Assess your savings and debt obligations in light of inflationary pressures. While high inflation may erode the value of cash savings, it can also reduce the real burden of fixed-rate debts over time. Consider refinancing debt or exploring flexible repayment options to align with inflation expectations. 4. Invest in skills and education. Inflation can impact wages and employment opportunities, making continuous skill development and education essential for maintaining competitiveness in the labor market. Investing in acquiring new skills or pursuing advanced education can enhance your earning potential and financial resilience against inflationary trends. 5. Monitor and adjust your budget. Keep a close eye on your budget and spending patterns to adapt to changing inflationary conditions. Prioritize essential expenses, explore cost-saving measures, and seek opportunities to optimize your spending without compromising your quality of life. Inflation is a fundamental economic phenomenon with far-reaching implications for individuals, businesses, and policymakers. By understanding the causes and effects of inflation and implementing proactive financial strategies, you can navigate its impact more effectively and safeguard your wallet against the erosive effects of rising prices. Stay informed, stay adaptable, and make informed decisions to protect your financial well-being in an inflationary world. If you found this video helpful, don't forget to like and subscribe for more exciting content. Thanks for watching, and until next time, keep chasing your dreams.